Hello, everyone. This is Bruce. It is Saturday, the 8th of January, 2022. Markets have been pretty frustrating. I just want to show you a couple things that I look at that hopefully will help as you consider, what to do in this market, how to think about this market. I have a number of computer screens open, so I'm going to jump around just a little bit. If we go over here, we're looking at the SPX, which is the S&P 500. On this particular chart, each candle is 1 day. So this was Friday, just the other day. And a couple things I want you to focus on. I want you, first of all, to ignore this very light blue line. Just pretend that's not even there. I use that for other trading. But this gold line is the 20-day moving average, and then the blue line is the 50-day moving average, and the red line is the 200-day moving average. And no matter what the price looks like above, if the 20 is above the 50 and the 50 is above the 200, that's called a technical bull market. So we are in a bull market. We've been in a bull market. And even with all this craziness, we are in what's known as a technical bull market. Now, let me move to another screen, make it a little bit easier to see. Same thing, S&P 500. We're going to focus on the right-hand side of the screen first. This is a daily chart. It's very, very similar to what we just looked at. On this particular chart, I've got the 5-day moving average, and then the 20, and then the 50. Really, you just want to focus on the 20 and the 50 for trend analysis. The 5 is just for timing analysis of when to buy certain things. So just like the other chart, the 20 is above the 50, we're in technical bull market. Now, with that said, if we look all the way back here, if you look at the bottom, you're going to see a date that pops up. I hope you can see this. So I'm going to start at 11/4. This would be last November 4th. If you look at the price last November on the 4th, you can see, if you let your eyes go all the way across to the right, we are pretty much where we were months ago. This market has done virtually nothing. If I were to draw a box around that, just to help you see what I'm talking about, I'd start right about here and go there, and you can see that in that amount of time, we've really done nothing. So when this happens and you focus on this, you've got very short-term, very dramatic downdraft in the market, and then a very dramatic updraft in the market, and then all the way back down, and then all the way back up. And that can drive you nuts. So that's why we use technical analysis to help us determine, are we still in a bull market? And again, like I said, the 20 line is above the 50, 50 is above the 200, so yes. If you take your eyes over to the left-hand side of the chart, then what we're looking at here is each bar represents 1 week, okay? These on the right, each bar is 1 day, here's 1 week. So if I were, I'm going to clear this drawing just for a second, and we're going to draw a new one, bear with me. And if I were to go right about here, let's see, yep, right about here, you will see that is approximately the same time frame as we looked at starting here, which was about November 4th. This would be sometime the first week of November, but this is a weekly chart. And instead of it looking so dramatic with the ups and downs, it's less dramatic. It's still volatile, but it looks less dramatic. So one of the things that I do is I always look at a longer term chart to get a better idea. And let me clear those drawings also. And if I were to, bear with me, let me get a little spotlight here. There we go. If we look at this area, and this is a weekly chart, you can see that this sure does just look like a very calm, very nice, uptrending market. Boy, this is beautiful. We want to be in here. But remember, this area of the market is exactly the same as this as far as time. So looking at the market on a daily basis, I promise you, can drive you crazy. Because I've been looking at it on a daily basis for 36 years now, and look at me. So yes, this can drive you nuts. You always want to zoom out and look to say, are we in a trend? Because if we are in an uptrend, no matter what's going on, we kind of want to try to stay with the trend. That's number one. Number two, oh, let me tell you what the colors are. The dark blue, this is just another technology system, but the dark blue means it is a strong uptrend, and then the aqua or the light blue that you see scattered about, that means we're still in an uptrend, but it's weaker. We're not seeing a lot of momentum. So those pullbacks, and even a couple of these pullbacks you can see, that just means there wasn't a lot of momentum, but it does mean we're still in an uptrend. For this particular system to start to suggest we're not in an uptrend, we would change from dark blue and aqua to this light red, or whatever color that is, and then purple and pink. All of these colors are other than transitionary, these are more bear market colors, but we don't see any of that in here. So bottom line is, without being redundant, we are still in an uptrend until that changes. And we will know that that changes if the 20-day falls below the 50-day, we're in a confirmed correction. We're not there yet. So this is just considered volatility and a sideways market. And I'll tell you another thing that this causes, because I just know this because I've been doing this a long time, is when you have this type of a market, frustration kicks in for clients. And that's normal. It's absolutely normal. You see your account going nowhere. Sometimes you see it going down more than going up, because downdrafts are usually more violent than updrafts. That's pretty normal. It takes a little bit longer to make money than it does to lose money. That's pretty normal. So during a period like this, and we're talking about months, during a period like this, frustration sets in, and you wonder, are we doing the right thing? The answer is, yeah, we are doing the right thing, but it's frustrating. The market is just not participating. Will that change? Absolutely, it will change. It always does. We go from, this is, by the way, this is called consolidation. And it's very typical that the market will go from consolidation, and then when it breaks out, whether it breaks out to the upside or to the downside, and I suspect it will be to the upside, but we'll have to wait and see. After a period of consolidation, the move higher is usually pretty dramatic. Let me see if I can, bear with me one more second here. I don't want to annotate, I just want mouse, there we go. So let's see if I can find a good area of consolidation. Well, this was, it's sloppy, but that was a consolidation. You can see where the market was back in July. It was pretty much the same as it was October 13th, and then boom, it shot up. And now it looks like we're in this consolidation. So the market doesn't go straight up. It goes up, sideways with a lot of volatility, and then up, and then sideways with a lot of volatility. Or conversely, it could go down, sideways, consolidating, and then down further. But that would be a bear market. We're not in a bear market. So these are a couple of things that I look at. Another area that I look at, bear with me, let me go grab it on my computer screen, is this is a market timing graph that I use quite a bit. This is from yet another piece of technology. They're all different pieces of technology. This is the S&P 500. This is not the S&P 500. This is called the VectorVest Composite, which includes the S&P and the Dow and the Russell, and it's 9,500 stocks. So it's really the whole broad market. Okay. And this company just believes in using the broad market to look for trends rather than using a subset index like the S&P or the Dow. And a couple of things that are very interesting on this chart is it's almost easier to see this consolidation phase. Here's the tops, that's called resistance. Here's the bottom, which is called support. And this is support because the market went down and hit that support, and it went down here. So it's hit that level quite a number of times. And what you'll see is where the market is, that was Friday, it's really close to support. And support is an area that generally is supportive, just like its name. The market comes down to an area of support or very close to it and then bounces back up. So I wouldn't be surprised to see that happen again. It's very possible. If the market goes down below that, well, we've got other troubles. Then the next area of support is all the way down here. But I don't think that's going to happen. And then let's say Monday, Tuesday, it does start to head back up. Well, now we have a new area of resistance. So what we want to see is the price of the market move up and not bounce off resistance again, as it did before. We want to see it break through resistance so it can continue higher to the next level of resistance, which is way up here, which was the all-time high. And if it can break through that resistance, then we call it blue skies. There's nothing on top. It can go as high as it wants to go. But again, markets tend to have rallies. This is pretty staggering pullback, but we have seen this, and it's all part of this very long consolidation the market's in. The way I use this for trend is this particular white line is a 30-day moving average. When the price closes above the 30-day moving average, and this particular oscillator called the DPO or detrended price oscillator closes above the zero line, that's an indication, and this is a fairly short term, but that we're in a short term uptrend rather than a full on long term. So we use these for different trend types, but just another way to look at things. So this is difficult. This is hard to make money in. It's called consolidation or a sideways market. It's exactly the same thing. The worst sideways market that I can remember was fairly recently. I believe it was 2015, or maybe it was part of 2014 and part of 2015, where we had a year of a sideways consolidation, which was just brutal because it's just so hard to make money in a market like that. But that was abnormally long. Having it be a month, 2 months, 3 months is much more normal. Last thing I'll say about this particular chart is, I'm also looking for different indicators to help me know when to buy. So this is another indicator down here called the MACD. Well, it's like the MACD. This is the price oscillator. And when it goes above the zero line, it's generally a good buy point. As you can see, it was here. So I went and bought some stocks or options or whatever I'm buying on your behalf because it looked like a good buying opportunity. And technically speaking, it was. There was nothing that suggested otherwise. But it wasn't very long before it just rolled over and came back down. And that's just part of the market. It's just, that's the way it works. So it doesn't mean that our strategies aren't working. It doesn't mean that your investments aren't working. It means that the market isn't working right now. And we're in this sideways consolidation. Hopefully we will have a breakout soon, but we'll see. I mean, no one can tell when that's going to happen. It just sort of happens, just like it has in the past. So I don't know if this helped. I hope it helped just a little bit. I'm not yet overly concerned. I think that COVID is brutal right now across the United States. I know where I live in Bellingham, Washington, many, if not all, of our biggest brew pubs, which is a huge thing out here in the Northwest, but our brew pubs and restaurants have all closed again because there are so many of these Omicron COVID cases that they don't even have servers. The good news is that vaccinated people don't seem to be getting very sick with this. And the other good news is I was listening to the head of the CDC who suggested this massive increase in cases is moving so quickly across the United States and the globe that she is predicting that this will be over even this month. So hopefully the number of cases will she felt that they will drop as quickly as they came on. And that would be excellent for reopenings. It would be excellent news for the markets. We're still dealing with inflation, but all of these things factor in. The very long trend is we're still in a long-term bull trend. And right now, short term, we're in a consolidation phase, which is unbelievably frustrating to everyone. I completely understand. Whenever you have questions, if the markets are causing you to lose sleep, if you start to wonder, am I doing the right thing? How should I be invested? How much risk should I be taking? Those are conversations that you really need to have with me, because I'll give you objective answers. I will never try to force you in one direction or another. I will honor your emotions, but I will give you the best advice I can. The advice that I give you will be based off of this. It will be based off of analysis. It just won't be off the cuff. So give me a call if you're having any of those feelings, and we will certainly talk about it. Okay, enjoy the rest of your weekend, and I will chat with you next week.